But for more on whether today's data will move the needle for the Fed, we turn to Andrew Sliman, Senior Portfolio Manager at Morgan Stanley Investment Management, and also here on set with us, Stephanie Roth, Chief Economist at Wolfe Research. Welcome. And welcome. Andrew, real quickly, because last time we spoke, you were still pretty optimistic about markets and implicitly the economy. Do you remain that way?
Yeah, and I think if you look at the undertones of what's happening in the market is consistent with economy slowing but not breaking. You're seeing a rotation from the cyclical stocks to the growth stocks. But if the market thought the economy was really breaking, you'd see a rotation more into the safe stocks, the staples, the healthcare, utilities, and so forth. But we're not seeing that. So I think the market is, more or less validating what the Fed has tried to pursue, which is inflation down, economy slowing but not breaking.
Let me throw this out there for all of you. I'm laughing because Steve knows that I like to try some thoughts out here, and I think this is the right group to do so. Andrew, is it possible that AI is the business cycle right now? In other words, everyone's trying to figure out, do we look at things excluding the Mag 7, or from a trading point of view, do you stick with the Mag 7 and all the concomitant stocks that have been doing well? I mean, is it just possible that that innovation cycle is so powerful and the companies are so large that that is literally prolonging or more or less becoming the business cycle right now?
Yes, but I think there's other things going on that have not gotten focused recently, like fiscal policy. We're spending a lot of money, and that's going to help industrial material companies that are benefiting from that. The semiconductor equipment by the build out of the chip sector, which is different than AI.
Right.
So I think there's other things going on. It's just that really in the last month or so, it's AI sucked all the oxygen out of everything. But I would argue that that's a great setup going into earnings season, because I think a lot of companies can highlight how they're doing, even if they're not in AI. And I think a lot of parts of the economy are doing well.
Stephanie, I saw you nodding there, especially about the fiscal piece of it. How does that play into everything?
Yeah, fiscal's been driving a lot of the strength that we've seen so far. I mean, especially the chips build out that we just talked about. When we think about AI, though, it's really only driving about 0.7% of GDP compared to housing, which is 3 to 4, right?
Okay, all right. So Ed Leamer, that's where he used to say housing is the business cycle.
Exactly.
So it still is. That's still the overarching force in many ways.
Well, I mean, housing.
The founder and portfolio manager of Cochu Management, billionaire Philip Lafont, is one of those AI bulls. His fund's top 10 holdings are mostly tech stocks, demonstrating how bullish he is on the industry. In a recent interview with Bloomberg, he discussed why Nvidia stock is still one of his top AI picks despite the recent pullbacks it experienced. While some analysts and experts believe that the AI boom is a bubble that is about to burst, many others think we're just getting started and expect AI to get even bigger at this point. We'll explain his reasoning in today's video, along with whether or not investors should buy Nvidia stock now. Before we get started, though, if you'd like to stay up to date on the most recent developments regarding Nvidia and the stock market, you can subscribe to our channel. We post updates about the biggest shifts and market catalysts. So click the follow button to ensure you don't miss any of them. All right, back to today's video.
But the point is that, sure, AI is super important for the market. It's important for the economy, but perhaps a little bit less so. So we have to still pay attention to the cyclical parts of the economy, manufacturing and leisure. And by the way, the immigration trends are super important today as well.
So but this is kind of where I'm going with this. So the ISMs, which I think a lot of people miss this week, being a holiday week and all, the manufacturing one, bad. It's not third month straight. It's still in contraction. Then the services one, as he was talking about, comes out Wednesday in contraction territory. So what is that telling us about what's going on with the economy? It doesn't sound like a picture of strength right now.
It certainly isn't strength. I would say we're losing some momentum, but some of the survey-type measures like ISM tend to capture momentum, right? They're not measures of absolute levels of activity. So it's telling you things are slowing down, and that we kind of saw that in a lot of the data, and this is just gives us the ability for the Fed to be able to cut in September, which is our base case.
So the mid-cycle supportive cut, the kind of nothing's a disaster yet, we're not starting. I see Andrew nodding with that as well. Steve, what would you say?
I need to warn people, I am objectively more subjectively optimistic on Friday afternoons.
So because you see the week,
it's just
especially in the summer.
Especially in the summer. But here's the deal: if AI is the business cycle, and warning, I don't cover stocks either, but I do sort of think about macro things. If AI is the business cycle, these are very early days in the AI business cycle. I have been fascinated by the focus of the market on the inventors of the stuff and very little focus on the users of the stuff. If Wall Street has this entirely wrong, that's one scenario, which is possible. Maybe the tech ends up being a bust. If it's not a bust, they're putting an awful lot of capital into companies that are going to be providing a whole new technology to, let's say, the entire economy. And as far as I can tell, they haven't given a dollar to somebody who's going to benefit from this technology. And I don't think we've thought this through down the road. Now, it may be that only those companies are the ones who benefit. There are stories of technological progress that do happen. For example, in the Industrial Revolution in England, only the real estate guys made any money because you can't think of you can't think of a single company that came out of the textile revolution of England, okay? So there, in San Francisco, too, by the way, Silicon Valley, real estate did really well. In any event, maybe just Nvidia does well, but maybe there's a whole story of people using Nvidia chips that are going to change the economy. So I just say, if AI is the business cycle, and that's right, these are early days.
And it has.
Lafont made apparent in an interview with Bloomberg that he believes AI isn't overhyped and that current values aren't wholly unrealistic, adding that the next stage of AI will revolve around real estate and data centers. Additionally, he believes that there is a huge opportunity for NVIDIA and the data center industry. He is entirely correct to believe that there is a massive opportunity in humanoid robots and AI-powered robots in general. In fact, the global market for AI-powered robots is predicted to reach a valuation of $184.75 billion by 2030. Lafont may support Nvidia stock for two reasons. The worldwide data center market is predicted to increase in value from $301 billion in 2023 to $622 billion by 2030. However, there are many more reasons to be bullish that we're going to discuss right now, so don't miss out. Hi there, and welcome back to the Investing Tutorial.
The impact of that as far as the semiconductor business is concerned, and really, where are we at today in terms of the next big, if we're talking about we're already in the next new industrial revolution, where are we at this point in time?
The way I look at it is we are at the start of an accelerated phase of discovering what AI can do. And this does require bigger and bigger models to train these LLMs. It's going to consume a lot of capacity from a semiconductor perspective, a lot of investment that large companies are making, governments are going to be making. And the next step, obviously, is to then figure out how to make these models smarter, because the current trajectory will take it only so far. And there's a lot of research going on that front as well. But I think we are at the cusp of, a 10, 20-year journey where the rate of change in our business is going to become exponential in terms of seeing what AI can do. And it's going to have a significant level of ripple effects across society, across many, many different businesses. There are certain types of problems that AI is uniquely positioned to solve in a better way than human beings can. And working with big data is one of them, right? And we spoke about healthcare. And, AI programs are uniquely capable of looking at massive data sets of people with, certain types of diseases and certain genetic makeup, and be able to tell trends on, what is causing certain things and what kind of drugs can work in certain ways better than other drugs. And as we spoke about AlphaFold earlier, it took us 50, 60 years to understand the 3D structure of proteins of 0.1% of all the proteins that exist. 50, 60 years. It took us 6 months for AlphaFold to figure out the 3D structure of the 99.9% of the remaining proteins in the world, right? So there are these kinds of really powerful capabilities, and we can use them in a really good way to reinvent a lot of things. Take education.
Lafont's fund owns approximately 13 million Nvidia shares, valued at $1.2 billion. Although the company is one of his top AI picks, he remains concerned about the geopolitical risks associated with Nvidia's over-reliance on its Taiwanese supplier TSMC, particularly in light of the escalating tensions between Taiwan and China. For this reason, Nvidia should work harder to diversify its supply chain. However, It's reasonable to say that Nvidia justified its growth expectations of over 100% for this year and 32% for the following year when it unveiled its three new accelerators, the B200, GB200, and GB200 NVL72, at this year's GTC conference. Nonetheless, Tom O'Malley of Barclays most recently assigned the stock an overweight or bullish rating and set a $145 price target, noting a possible $25 billion opportunity for NVIDIA in sovereign AI or nations employing the company's technology to advance their AI capabilities. The worldwide AI market for governments and public services is expected to develop at a compound annual growth rate of 16.9% between 2023 and 2030, reaching a value of $51.78 billion that year. Sovereign AI presents NVIDIA with even more opportunities. Since Nvidia already controls 90% of the market for AI servers, it won't come as a huge surprise if it also takes a sizable chunk of the sovereign AI industry. While Wall Street analysts generally predict that Nvidia will earn $3.55 per share in fiscal 2026, Tom O'Malley expects the company to earn $3.62 per share. This shows how bullish Barclays is on the company. Let's find out if the current dip is the right time to load up on Nvidia shares. If you made it this far into the video, thank you. These videos take a lot of time and effort to make, so if you enjoyed them, please hit the like button and subscribe to the channel.
The fact that Apple's up notably, Tesla's like ripping today, so wouldn't be surprised if Nvidia could catch some of that bid, but it's having a little trouble, Rick. I mean, we're still kind of stuck here at like this 120.
Yeah, kind of a bumpy road for the broader market today, but we can see Nvidia kind of stuck in a range, like you said here. Backtracking, we saw that we had a very strong rally earlier in this year, topped out around this 97 level twice, and then a big push to the upside once we did eventually break beyond that level. Shorter term trend line in white there, rather steep. We had our yearly all-time highs here near 140 and then a drop off. Now we've got this kind of consolidation area between about 118 to 127 or so, our green and red lines respectively here. We tested the waters below our yellow 21-day exponential moving average here. That's this line right here. And we have recovered above it here. The line was in danger of starting to trend downward. That would have been a sign of potential trend change here. So be on the lookout to see if we can hang on above this level as we head into the close here. This is a supportive point that we want to hold on to if you're bullish here. Okay. RSI was trending upward nicely here. Spent a good bit of time in this overbought area here above that 70 threshold, but momentum has dropped off here. We are managing to stay above that 50 midline that separates bullish from bearish momentum, but we've certainly taken a hit here in terms of the pace of the gains. Now we just kind of have this range to watch here, so be on the lookout for a break above either of the.
It's impossible to discuss Wall Street's most upgraded stocks without mentioning Nvidia, the chip giant that has led the generative AI boom and is widely expected to solidify its position as a market leader in providing the infrastructure for the upcoming internet generation as Web 3.0 takes off. Meanwhile, the stock itself saw growth of over 150% in the first half of 2024 alone, growth that in the past would have been hailed as astounding. If you're an investor who considers Wall Street analysts' opinions before making an investment, you should know this. However, CEO Jensen Huang seems unfazed by recent struggles and has suggested that the company's upcoming Blackwell platform could become the most successful product in its history. In the event of a phenomenal 2023, the stock might once again be the most valuable in the world if Blackwell launches successfully. With this in mind, the stock is still a buy in our opinion, and long-term growth investors shouldn't listen to traders who try to scare Nvidia holders into selling early. It's clear that Nvidia has experienced some weakness in recent weeks, which has caused investor uncertainty and fears that the generative AI rally may be losing steam. Purchasing Nvidia stock now seems like a no-brainer because there is still room for growth. However, if the company's Q2 earnings in August turn out to be stellar, we could even say that the stock will recover and might even soar above current levels. What do you think about Nvidia stock? Is the present price worth paying for it? Please share your opinions with us in the comments below, and don't forget to share your NVIDIA valuation with us.